It's Brian Preston, the money guy.
Let me tell you why you should actually be happy about market crashes. And I know that's somewhat of a contrarian mindset, but this is why you're a financial mutant. This is why we know our show is not for the 80% that struggle with just basics, like even just paying off your credit card. We know that this show is made for the 20% that has the basics under control and you're looking for maximization techniques on how to grow your army of dollar bills. I want you to have the superpower that whenever there's volatility, whenever the market's going down, instead of calling all of your friends and trying to poison the well on why you should be a long-term investor, you're actually getting excited. The frothiness is not in the market. The frothiness is in you getting excited about what you can do with the investments. We have the perfect example. The Great Depression.
Brian, I'm so excited that we've put this example in here because, again, if you're listening to this live, we actually have a chat going, and we can see what you're saying. We can see this. What's so funny is if we're going to the show, I've had people just peppering the chat with, yeah, but this wasn't during the Great Depression. Oh, I see that 2018 to, yeah, but the last 10 years, that's too good of a time period. You ought to look at something like, the 1920s and 1930s. This part of the show is for you.
Yeah, because, look at this. We have a chart here, and here's something that I think is interesting. We all know the Great Depression happened in the late 20s. Here's something that I don't think people understand, is that there was a period of time. I always talk about this V-shaped recovery with financial markets. Look, we just came through a pandemic. We're still working our way through it, but March of 2000, market got just obliterated, went down over 35%. But then it V-shaped recovery very quickly. We made our money back and we were onward. What if that didn't happen?
Yep.
What if the V-shaped recovery just wasn't as fast as it traditionally is? Back in the Great Depression, there was actually a 25-year period. If you look at from 1929 all the way to 1954, where the Dow only increased, I kid you not, this is not a typo, $2.
$2 over a 25-year period.
That sounds disastrous. If I'm a person that's an investor, you're like, wait a minute, the world's market timer, I bought this, I would be in so much trouble if over 25 years, that's almost an entire working career. What would you do if you just came out or you had been investing for 10 years and you were stuck with a market that didn't go up for 25 years? You'd get scared. You'd probably be very nervous. That would be a horrible situation. Remember, you're financial mutants, guys. What might look like a horrible situation is actually an incredible opportunity, and we have the numbers, we have the proof to show you that even though things are scary, if you will, just like Cole Trickle did in Days of Thunder, push the gas, drive through the smoke and the flames, you will come out better on the other side. Just show them the data, bud.
So here's what we said. Okay, let's take a hypothetical $10,000 that's invested each year, beginning on September 1st, 1929, all the way until November 1st of 1954. So there's actually 26 inflows of capital of $10,000. So over that period, if you were investing in that exact same market, you will have invested $260,000. I'm going to say it a little differently. You will have invested $260,000 over a period through which the market made $2. The indice that we're using made $2 over that 25-year period. We're going to assume that dividends get reinvested each year. Well, what you might be amazed to find is that at the end of this 25-year period, that $260,000 investment compounded to $1.5 million, an 11.7% per year total return. I'm going to say that again. During the Great Depression, if you were dollar cost averaging in that exact same market over a 25-year time period, you could have actually made, during the Great Depression, an almost 12% per year rate of return.
Talking about turning that frown upside down. This is, guys, don't let the noise of that we might be at all-time highs keep you from investing in your future, because I just want you to create a plan. I want you to create how much, know when you need the money and know how much you can put towards it. We're recommending about 25% of your gross income, not net, gross income. If you can put that in over time, you will be rewarded whether the market goes up, whether the market in the short term goes down. Be a contrarian, be a financial mutant. you will find financial success.
We don't know which way the markets are going to go. We never know which way they're going to go. But what we do know is if we can master these 3 S's, we'll be prepared for it, right? You know, a lot of people are dropping the comments and, yeah, well, I love that illustration, but what if I'm retired, or what if I'm not actually able to dollar cost average into it? That's where you got to get the first 2 S's right. You got to make sure you have the right safety net in place, your emergency reserves. You got to make sure you have self-control, and one way you do that is by having a diversified portfolio that doesn't do what the market is doing. We're going to keep loading you up with this kind of stuff. We want you to be prepared. Whether the market is hitting all-time highs or all-time lows, we're going to keep putting great content out there for you to be able to use. If you've not gone to the website, you can go check out moneyguy.com/resources. If you're someone who's interested in the Financial Order of Operations course, doing a deep dive into into how to use the next dollar or where your next dollar should go, the Financial Order of Operations course just got better, and it is out there available for you to go take advantage of.
Yeah, we just doubled all the content, added 27 more videos, guys. And we even, there's some special pricing right now. Go check it out. Free download first at moneyguy.com/resources. But also, if you go to visit.learn.moneyguy.com, you can download the course. Go check it out because we've tried to load it up. And this is just all part of the abundance cycle. We're financial advisors, and people like, how can these guys just give it away? Well, they give tons of free advice. It's because we call this the abundance cycle. Yep. We want you to come learn, apply, grow. When you reach that graduation point where your life is just too complicated, because success creates complications.
Absolutely.
We're going to be your co-pilots. You're going to take the relationship to the next level. But we've also created this Financial Order of Operations to accelerate that abundance cycle process. So, learn, apply, grow, become the best version of your financial self. We're going to continue to give away tons of free information. We just appreciate you guys. Thank you, thank you, thank you. I can't believe how this journey's going. You guys are a big part of it. Money Guy team, out.